Welcome back, gang. Yeah, I apologize for last night, but we had a good night's sleep. We sorted ourselves out. Happy days. I'm just checking to make sure I've actually pressed the streaming button because I have the tendency to press record and sit and talk to this camera for 20 minutes before I realize what has been going on. So what has been going on? Well, look, cryptocurrency seems to be bored right now with this story of the ETF. We've had positive articles, we've had negative articles. Now, all of a sudden, we got the BlackRock ETF for Ethereum, and Ethereum didn't really do much yesterday, even on that news coming out. So it's like investors are like, yeah, all right, you keep dangling this carrot, nothing's going to happen. I'm not interested anymore. Could that be leading to why Bitcoin's taken a bit of a tumble to the downside? Why Ethereum's come back down again? Or are we just getting ready? You see, today's the 17th. Today principally is the window that the SEC has to get ETFs approved. Now, we know that they've actually put some delays in place, but they're not the delays from the big players that are putting forward the ETFs, all right? So we could be in for some surprise movement, either going into today's New York live stream, which we're doing right now, or even in Asia tonight, when the markets in principle are closed, but cryptocurrency still operates. It's usually at the weekends when we see some flavor hit the charts, all right? But in today's live stream, I'm going to break it all down for you. We're going to look at Bitcoin. We're going to look at Solana. We're going to look at a few altcoins. I know altcoin Casper's been doing some big things as well. We're going to dive into Ethereum. We're also going to look at where we are in the legacy markets with Euro, the NASDAQ, the S&P, and why all investors right now are optimistic about the fact that the bonds now, or should I say the interest rates, are going to look to get cut, and that it means now money is going to be easily accessible. Not straight away, don't get it twisted, right? These Fed policies, they take a little while to really come into fruition, okay? So let's get with the flavor. Again, I apologize for yesterday, so let's get with it. And let's find out what Bitcoin is getting up to. Here we go. What am I going down there for? I don't need to do that. That's what I need to do. Yeah, here we are. Right, so Bitcoin. Chat, what's going on? Thank you very much, Slacker. Yes, it's going to be a bloody weekend. All right, okay. All right, then. The only thing I did point out was short. Yes, okay. I'm here. Yep, good. All right, and wicked. Let's get with it. What we got? Bitcoin. Seems like they gave back most of what they did yesterday, all right? Now, what we're witnessing is this is consistent with probing, okay? Now, what is probing? Probing is you have yourself a little range, right? And what the algorithms like to do is because the algorithms work on two concepts, okay? You've got simple algorithms where they execute in principle, parent orders to child orders, okay? And you've got like these machine learning algorithms, okay? Now, the machine learning algorithms are where it's not so much learning, but what they do is they gun to areas of liquidity, all right, to garner interest. Because market maker in principle is up against other market makers, other liquidity providers, all right? And they're all working together and against each other, all right? Because market maker's obligation is to make sure that he provides liquidity for the exchange. The exchange's obligation is to make sure that they induce retail traders to start committing liquidity on their platform. So when you go long, market maker goes short, and his obligation to the exchange is to make sure that the liquidity is there matched on leverage so that you get the benefit of using a small amount of money to take advantage of a larger sum. This is what we understand to be as open interest. So the higher open interest is, and it's a positive outlook, then it means that people are using lots and lots of leverage to take advantage of future price points in the futures markets, right? So what I'm seeing Bitcoin doing is it's probing. So let's hypothetically assume this is Bitcoin's price range, right? Above that, we can't see it, but we can see it in the principle of the order flow with the Bookmap. These are orders that have yet to be put, okay? Or any previous orders that have come in that could come back in at a later point, okay? So you can see up here, there was liquidity, right? And when we zoom out and we look at Bitcoin, we can say to ourselves, all right then, so what is it that they've actually been preparing for? And this is where the art of understanding uncertainty is where you can really capitalize on certain moves because the behavior is the same, all right? There are two emotions in trading that don't change. That's fear and greed. There's no in between. And the market itself, or the algorithms, will always gun for those areas where they can probe that. So a probe would be a move to the upside. How many people can they encourage in the eyes of fear, which means I'm missing out on a move to the upside, followed by a move coming back down again, and then trying to go back up again to the point where they're going to be engaging in traders' greed. Well, I'm going to hold on to it because I think it's going to continue higher. They come back down again. They probe. They keep probing. And at the same time, they're sweeping up liquidity for traders who are placing orders here, orders here, orders here, and orders here. Take that logic and go to where price is right now. Look at where the biggest activity is happening. It's happening at the highest point of the range and at the lowest point of the range. All right. Now, we won't know indefinitely that for definite that they will move to this point, okay? Because if you just look back, you won't assume that, all right? Now, you can see here, top part of the range, that's what they've been doing. So you then say to yourself, okay, so this is the range that they've been probing up to come back down, probing up to come back down, which in principle leads to a release. And then they bring it back down into that same range that they've been doing it. You see, Bitcoin has been holding out inside of this zone at 34,357. And I said to you yesterday that if Bitcoin does invalidate, all right, if it does invalidate the 34,813, then Bitcoin's going down, all right? There's no two ways about it. It's going to go down and it's going to come and tap that 50 EMA. Now, people are holding on to the idea that this ETF is going to get rolled out. We're waiting for that approval date. And all of what you're seeing happening inside here is consistent with them accumulating, all right? But we don't know for sure if the accumulation is going to be favoring higher prices or lower prices. That's when we go back down to the smaller timeframes because it all develops. The behavior develops, right? So look at it like this. We've had this controlled move up, and we've had this controlled move down, which has stayed in line with the recovery of the vector zone, okay? Now, Bitcoin has been doing very well to hold out at the daily open. We've had 1, 2, 3 hits of the daily, and it seems to be stalling inside of that range. Now, as I said to you before, with the date for the ETFs, today's the day. It's the 17th, all right? So something needs to happen, all right? We could get good news where they approve the ETF, or we can get bad news and the ETF gets put in the bin. All right, or delayed. Now, the market's going to react to that accordingly, okay? Now, with that being said, this is what we're talking about. BlackRock Ether ETF Prospectus gets filled with the SEC. That was cool. That happened yesterday morning, but it didn't really bring any flavor to Ethereum. We go over to Ethereum right now, and you can see that bad boy ain't doing too well. I'm going to close off my long that I've got on Ethereum. It hasn't hit my stop zone, so I don't know if I should even close it, but I'm happy with the profit that I'll get when I close it. But the problem is like everyone in crypto right now, we are effectively waiting for an approval, okay? Now, some might say, why don't you just close it and get the approval? You know, the approval's going to come. So if it's a case of when, all right, then I'll just sit and hold it. But the problem is the market in principle isn't going to care about that. You can sit and wait as long as you want, but the market can actually drop back down. We could see Ethereum come all the way back down towards this point of 1847. Look at the moving averages. They've broken the 200. The only next logical place for Ethereum to go is the 800 EMA. But it seems to be holding out inside of this range, all right? This range right here is where they last made the move from. So that's important for us because we don't know exactly where it's going to go next, all right? Because not everyone's going to be feeling the same way at that point in time, which is consistent with what Mark Douglas said in his book, Trading in the Zone. Every moment is unique. Every moment is unique. It only takes one candle to start something. And there's that one candle right there. Green vector, shift out. It leads to a ripple effect. All right? You then got this one candle right here. Sell off. It comes all the way back down. So we are effectively one candle away from either the ETF that gets approved or the ETF gets delayed. Okay? Now, all sorts of news are coming out in cryptocurrency. Look at XRP. That gets relisted again on a major crypto exchange. Sex.io, a major cryptocurrency exchange, has relisted Ripple affiliated XRP token for its US customers. Happy days. We go over to XRP itself and we have a look and say, well, where's XRP at? It ain't doing nothing. You know, it's not doing much. But where everyone is expecting crypto to make a move up, that move up might not happen straight away. But then we'll look at the flip side to that and say, yeah, well, we're accumulating. We'll accumulate and accumulate and accumulate. That's fine, okay? But when you're looking for day trading opportunities, right, All it takes is just one sentiment change in the marketplace, and that could just lead to some madness, all right? So if you're day trading cryptocurrency or Bitcoin, I mean, look, we've got no news coming out today. There's nothing happening, all right? Retail sales come in for the UK, and that came in pretty, it's slump, all right? Negative, never mind. But we don't have any news announcements. So today is really a day where we could be given a random spout of news in the crypto markets, all right? The stock market itself is all good. Why? Because they're all happy. The bonds are rallying. The rate cut conviction builds. Everyone's getting up to the idea that now the Fed is going to be cutting interest rates, and that's going to be good news for the marketplace. The problem is the economy is starting to show signs that it starts breaking down. Why? Because a lot of companies are declaring that they're going to be cutting their wages, they're going to be cutting the workforce, they're going to be preserving capital, and that's not consistent with economic growth. And we can see that from the yields themselves. If we look at the yields market, you can see the 2-year is starting to trade back up. So that's logically going to be sending the bonds market down. We go into the bonds, you can see bonds are coming back down again. They have been doing well to move back up, but this is all based on news. That's why you're seeing investors are in it for the short term. They load up on the 10-year, they get rid of the 10-year, all right? And that's what the problem is. When the yields keep on showing these signs that they're not going up for, or going down for long, and they come straight back up, it's just consistent with short-term maturity assets. They're not locking the money up for longer periods of time, all right? That's why you've got such volatility in the bonds market. It's tradable, but you can't, from an investor's point of view, he's going to put £1 million into the bonds market, but he's looking to take it out as soon as possible, all right? Because he's not locking it in for a longer period of time because he believes the longer-term outlook ain't looking so good. That's why the 2-year moves up aggressively, and that's why we've got an inversion on the yields with the 2-year and the 10, okay? Now, with that being said, look at this. Dogecoin futures open interest jumps to 7 billion Doge, indicating risky bets. The fear of missing out is coming into play. Now, let's just go over to Doge for a second. Look at this bad boy. Dogecoin is up 2.86%, all right? People feel like they're missing out on something. Now, we've got vector candle zones right here at 0.086. Will they come back to that? Most definitely. Look at the behavior. Look at what they've done. You see this? Green vector candle, red vector candle, drop back down, find support, climb all the way up again. What do you get here? Green vector candle, rise up, red vector, comes back down, find support, bounce up again. So it may not happen instantaneously, but it's going to start doing that flavor that they're marking up, all right? Now, we're always going to ask ourselves, does someone know something that we don't? Well, someone in the marketplace will know when the ETF will get approved. I think they have personally said, right, we know when we're going to approve it. Keep dropping this information over to them because it's keep the market alive, and then we'll do it at this point in time. They'll drop it when we won't expect it. That's the truth, in my opinion. They will drop it when we don't expect it. And everyone's expecting it. So all the money's coming in now, everything's coming down. All right? So that's one thing that we need to take into consideration. You got to think like the powers that be. You got to think like an algorithm. You've got to think like a market maker. You've got to say to yourself, how expensive is price right now? Have I got enough people trapped in the logic of it going higher? Have I got enough people trapped in the logic of it going lower? I need to shake up the guys that want to keep on buying as prices are going down, okay? I've got to make them think, shit, I've got better change direction. And I've got to make the guys who are going short on the idea that it cannot go down, right, it cannot go back up, make them think that, change direction, and then get them to commit the liquidity on the opposite side. I've now created this whole ball of liquidity that I can just go and swipe left, right, and center, which is consistent with these spiky moves up, spiky moves down. Look at these V-shaped plays right here, okay? Now, looking at the liquidity on Bitcoin, it's pretty flat, all right? I'm not really seeing any big orders on the Bookmap. Not that much interest coming in right now favoring higher prices, but we've got the limit buys at 32% coming into play right now with Bitcoin. We've moved away from the VWAP in principle, and we're effectively waiting to see if Bitcoin can actually get back up above the VWAP right here. Going over to the EXO Charts itself, we've got this logic right now that Bitcoin is in rotation on the VWAP, okay? Remember what we said about Bitcoin on the VWAP? Rotation, right? So that means it goes up, it goes above the VWAP, goes back down, above and down, above and down. There's no trend right now on the VWAP, and that's important because that kind of pretty much determines what the day's going to be like potentially. Coupled with the idea of Bookmap itself, right, we just had an order of 271 Bitcoin orders coming in at 36,600, all right? Market is not open yet, but it opens in 8 minutes or 9 minutes time. All right. So remember, the market can do whatever it wants. It's got free roam to go anywhere right now. Okay. So if rotation's coming into play, that means that if we don't get the commitment from traders in cryptocurrency, Bitcoin's probably going to stay sideways today. All right. But again, there's no reason for the markets to move today. There could be a reason that could be dropped onto us. And they've done it plenty of times. Quickly, someone says, yeah, the ETF is getting approved. Bang, it all moves up. Sorry, it's false. It comes back down. So it's like people are now becoming a little bit more cautious with the way they're going to approach the marketplace. All right. So we're going to keep an eye on that bad boy. Who on earth is knocking on my door right now? Bear with me a second, ladies and gentlemen. Who the hell is that? Why are you? Who are you? Oh, he wants to drop something off. Never mind. Don't even know why that guy's there and knocking on my door. Anyways, with that being said, ladies and gentlemen, let's just quickly go over to the live order flow. What do we have going off here? Sheep's starting to pop up its little brain. And looking at the volume again, not really seeing much coming into cryptocurrency. Look, double digits, not much. All right, triple digits right there, 122 million on Bitcoin, 126, 142. Just looking at the liquidations as well on the heat map, I can see, yeah, we've got a lot of guys that are running for the shorts again. All right, so we have got, let me just change this up right here. Happy days. Right, here we go. Short liquidations are coming in at 38,550. We've got $1.2 billion worth of short liquidations, right? They seem to be gunning for the liquidity because you can see right there, they're slowly tapping it, coming back down. Remember we said the story about probing. They're sweeping the liquidity to come back in, all right? Into the point where they can effectively get enough interest to spark a reaction, sweep up to come back down and range out again, all right? Now, there's not that much commitment, all right? So it's 2.3 billion at 38,500. Go back into the chart. Bitcoin right there. 38,500 puts us all the way up here. All right. So that's a little bit far, given that that's the hour time frame. That in principle would be from the daily open. That would be a 6% move in crypto. Well, they did that yesterday, but the flip side. All right. And the previous day to that, they moved up roughly around that much as well. So it's not a move that we can't assume couldn't happen. All right. But if we put two and two together and understand where we are, if the bonds are moving up, Euro is moving up, all right? Gold is moving up, right? The market is positive about the Fed cuts, and that's coming into conviction. There is only one thing for crypto to do today, and that is to move. But then saying that, look what happened with the CPI. Everything went up. Cryptocurrency had the day off, all right? So we've got to pay close attention to this range right here, okay? Now, that's for my day traders. The more they hold the daily open, the more of a conviction you will have about them acting in this area as support. The failure of red vector candles to break into the daily open could give you insight into them holding this range, all right? Now, when the market opens, we will see an initial reaction. They could gun for the traders that are hoping that the daily open sustains. You've got the 50 EMA right here that's holding as an area of resistance to be sure about the continuation back up. Bitcoin needs to clear the psychological low, the 50 EMA. Look at it. The 5 and 13 EMA, I've said it before, you don't trade until you see a breach of either of these zones. This is where we've got the range, okay? And you've got confluences. Look at how they respect that psychological low right there, okay? They went into it, they come back away from it. Retail traders would have gone long on the break of the 50 EMA, but we would have seen that that wasn't above the 50 EMA, and we see the resistance of the psychological low, it comes back down again, all right? So you're seeing that they're playing around with traders in this range because traders are looking for either the logic of the drop, the retrace, the continuation, okay? But inside of this structure itself, there could be a W forming. We could form a W formation, which is effectively a trap play, where they make people believe it's going down after making them think it's going down again, reverse, hit the short liquidations, give them a reason to go short again. They trigger that, happy days. Now, the sweet spot with the actual W formation itself is you want to see a red vector candle appearing as high as possible from the top side of the W formation. The lower it is, the more chance that they could actually spike the previous low on the W formation, which means that you do have an invalidation of the pattern. Now, sometimes what they like to do is they like to break below the first leg and then instantly come back up into it. But if momentum is picking up at that point, it could invalidate the play. So this is where you're caught in between the should do, would do, maybe, maybe not. All right. Is it going to play the drop, retrace, continuation, or is it going to act as an area of support? So then we collate all that information together and we say, okay, I've got confluences with the several tests of the daily open. That's important for me. If they're testing the daily open and rejecting it, it means that there's someone sustaining that zone and holding it. By taking EXO Charts itself, I'm going to look inside of the ranges that they're holding. Look at this. Now, you see these sweeps down lower and there's not really many people buying. It's because there's a lot of sellers being exhausted inside of these ranges, okay? That's exhaustion right there, exhaustion right here. And this is all happening at the lows, exhaustion right there. We had a little bit of interest from the buyers, but they held that point and then they instantly reversed away from it, all right? So these hits on the VWAP are effectively the daily open probes, all right? So they're making people do something to go short from these points, okay? So what do I need to see Bitcoin doing at this current price point? I need to see Bitcoin starting to relay these figures here. You see these 39s and 29s? These are Bitcoin orders. The higher these figures, the better, all right? Because it suggests to me that Delta is appearing at the lowest point, all right, after a move down. Look, a move down, and it's now Delta lifting price to send price even higher, all right? What you're looking for when it comes to Delta in the candlesticks, you can see this. You see how you've got Delta inside of this point right here? And then you go to this point, you see it's further down as well. And then a little bit more Delta down here at the lows of the candlestick. What you want is you want to see the Delta either be dispersed at the lowest point of the positive candle, all right? Lowest point going into the middle with a little bit more at the top. What you don't want to see is you don't want to see it at the highest point. Here's an example. Look at this. You see how most of the Delta has appeared at the top side of this candle, all right? Those are traders that are trapped in longs, all right? They then get a little bit of hope. It goes up, 89 steps in again. They spike it up, get more commitment, and then they rip it back down until they actually roll over because the buyers are all trapped inside of that range and they can't do anything about it. And then it all returns to the downside, okay? So when you're using EXO charts, you're aiming to see if the vector or the Delta is appearing at the lowest part of the candlestick, all right? That's positive. You don't want to see it ideally at the highest point. Why? Because it implies that traders are trapped and jumping onto the bandwagon too late, all right? The lowest and the middle, that's where the sweet spot is. Look, you've got this candlestick right here, but this is a continuation, but it's not at the highest point. Why? Because they haven't cleared any previous or significant ranges, all right? That is a momentum play where they're getting ready to mark price up. Now look at this, middle, Delta, positive, up it goes, middle, Delta, positive, come back down, hit the imbalances, test the same zone that they broke away from, which was the previous guys who went long in there. Happy days, those guys step in, up it goes. We got candle Delta at the lowest, and then we go to the highest point, and then you've got 105 orders up there. That's your trap, and then it comes back down again, okay? So that's really what you're looking for. Now, we look at this W formation here. Do we see the Delta starting to increase? Well, we've only got this point right here. You see that? That point right there is where there's interest. So this candlestick, as much as it's come back down, is finding an area of interest where logic says that they should jump from this point, okay? Now, we do have these imbalances behind. You've got VWAPs all the way inside of there, and we've got the actual VWAP itself. So we're going to anticipate that someone has to step in at this point. And this is what trading's all about. It's all about the anticipation. You're going to anticipate that someone's going to step in at this point. Look at how fast they're moving. The market's now open, all right? So we're going to wait and see, can they sustain this point? We've come back into the same point that they reversed from, all right? So we're going to see, can they sustain it? Because this is how you put together a conviction about where it's likely to go, all right? If they flush this zone and go down, then they're going to be working to these imbalances right here. Happy days. But we make the assumption, okay, Bitcoin has to hold this point. There's a reason why it's toying around in this range for a little while. They've had many attempts to break down into it, but interest seems to be coming in. So the logic says that interest has to come in and hold Bitcoin. Now look, sales are coming in at this point, but they're not marking lower, seeing activity on the asking side, all right? So my logic says that this should be a point that Bitcoin can reverse from, okay? How far? Well, look, there's a new candle that's come into play now. Okay, so now we're going to start seeing more information. They tried to break lower, so those same guys here are now stepping in here. So now we're going to assume that they're going to try and take over this spot and mark prices up until they get to the next point where they find the resistance. And as they keep moving price up, these guys that were here, up here at 33 and 17, they're going to be like, yo, it's back to our point again. Let's see if we can take advantage of the momentum. So we would anticipate them to start stepping in at this point as well. When you look at a candlestick, you're not looking at this. You're just hoping that the movement to the upside, to the downside is just going to be presented to you by the candle itself. Unless you're looking inside of the candlestick and thinking how someone else who... Look at that point. 11, 3 came in. 12 has come in. Smack bang at this point. Why is it busy at this point? Because someone's stepping in because they previously stepped in at this point. So if these guys are controlling this point right here in Bitcoin and they can sustain it, okay, then we're going to assume that Bitcoin's going to try and work out towards the next zone. There's an imbalance up here between 36,393. They'll gun for it. But how did we identify that that point right there could be a point where interest comes in? Look what's going on. It's marking up. The interest has stepped in at this point in time. How long is it going to be sustained for? Look, no one's selling. They logically are selling. Because as you lift the ask, it means that someone is buying from the sellers, okay? So now we've got the dominance on the idea that the sellers are hitting into the buyers. So aggressive buyers are coming in, all right? When you understand how to really look at the order flow, you'll then understand that when you get into the candlesticks, when you see a vector candle, all right, you're going to understand what's going on. And look, it hasn't done much. But when you're trading order flow and depth of market principles, this is what the institutional traders are looking for. They're looking for these quick moves. That's why we're seeing so much volume on the CME building up in relation to Binance. Like more institutional traders are trading cryptocurrency, all right, because of the open interest and the volume on the CME, all right, which is only consistent with institutional traders. Why? Because no one in the crypto space is trading cryptocurrency futures through the CME. They're trading it through Binance, through Bybit, all right? They're using retail-based platforms. Now, the CME is technically a retail-based platform or accessible to the retail, but it's also accessible to the institutional investors, all right? So that's their futures markets, which is heavily regulated, okay? But you can see just by that logic from EXO Charts, you're understanding how money is moving, all right? So these are orders that are filled. When we go into the Bookmap, you're looking and saying to yourself, all right, where are the orders that people are trying to place, hoping that they get filled, all right? Where are they? Well, we know at 36,600, someone is there, 271 orders. Let's assume 36,600. 36,600 puts us all the way up towards, let's go, this point right here, which is the weekly point of control of Bitcoin. Can we justify that Bitcoin could make its way up towards that point? I would say yes. Why? Because I'm getting interest from the lowest point. Where would I need to see Bitcoin go to believe that could be true? I need to see him break this point right here, which is at 36,455, okay? If they can break that point, happy days. We're going to start climbing back up. Why? Because there is clearly people stepping in at these points, and we would naturally want to see if the market can retaliate and hit that point and garner the same interest to get them to do what? To buy at that point, which is an opportunity for someone to sell, which means that the Bookmap tells us that at this point at 36,600, 271 Bitcoin orders on the sell side is going to be triggered. As long as that stays up there, we would then be of the assumption that we can take advantage of a move to the upside from this point on the basis that Bitcoin holds out. So now you're asking, but where would you put your stop as such, okay? That's all down to your level of risk, okay? Hypothetically, not financial advice, but if we were to be going long in these sort of areas right here, we would have to place our structure out or stop outside of the structure. Now, the problem we've got is outside the structure, there are imbalances that Bitcoin could come and test. So this is where you probe a trade, okay? When you probe a trade, you commit a certain amount of liquidity to get you to get a feel for what it could be doing, okay? So you don't put the house down. You commit a certain amount at a specific point in time. So then you say to yourself, right, okay, I'm going to place for example, a small bet right here that would say Bitcoin's going to go up and move towards this point right here. The momentum trigger could occur and send price even further from this point. So what am I doing? I'm probing the market. I'm testing to see if the play's going to work. If I'm wrong and it comes back down to this point right here, I will close my trade, take a small loss, and maybe reevaluate the idea of Bitcoin continuously going to the downside because it looks like it could be taking out these imbalances down below, okay? But we're not there yet. We're not there. I don't need to be thinking about that because it's not doing anything yet to suggest that that is going to be the case. If each moment is unique in the marketplace, why the fuck would you need to care about what's going to happen next? Because you just don't know. You have to go with what it's doing. And if you're in a position that's losing, you are getting information about the loss of the position. So then you say to yourself, it could return. But what if it doesn't? Let me go to Twitter. Let me go, yo, Steve, Dave, how much Bitcoin you... That's bullshit. And we need to be looking at what it's doing right now. Because the same way someone puts in 300 Bitcoin orders to get filled, okay, is the same way there's something behind that purpose. Why are you loading up 300 Bitcoins, bro? Why? Well, if we were to know that question, we would turn around, he would turn around and say, because I've got 15,000 orders that I need to put through, hypothetically, and I need to do it in increments of 300. Bang, 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 and put them into the market. It's exactly what has to happen, okay? You preserve your capital when you only take probes, okay? When you're testing. Right now, look, it's now testing. Where are my buyers? No one is stepping in just yet. It's a fast move. The market has just opened. It's 8 minutes now, okay? The market's moving down. Everything seems to be rolling down, but Bitcoin isn't really rolling down. It's only come back into where it was earlier on, okay? Now, look, there's empty shops. Someone's stepping in at this point right now. So you're going to be monitoring. They just transacted quite aggressively at this point. They'll come up and clear this imbalance. They don't like these little things inside there, okay? They don't like empty shops, all right? So has Bitcoin now done? Look, new session open. So is it going to invalidate? Here we go, look. You see? At this point in time, now it's coming down. We're going to see if it can actually clear the range. Where are we at? Well, we're not actually at a really low point anyway, but it's only in its same spot. But now look. Lots of selling coming in. All right, here is where we would anticipate exhaustion. Spike to try and come back up. Bookmap coming down to the liquidity, moved away from the VWAP. Okay, cool. Orders coming in, 18, 16. 37 holding out. Point of control is at this point in the candle. Someone's just been liquidated, that red dot right there, or a few people. The delta is all on low volume, guys. Look, 363, 868, 366. It's not that much volume, okay? So we're going to wait and see. Look, sellers have come in to sell. Now we're waiting to see. They're going to come and eat that imbalance. There's a previous point of control right there. We're going to hope that this point right here could initiate a reversal. Look left, you've got imbalances coming into play. So they seem to like these imbalances. Had you taken that long, you would have only lost a small amount of liquidity, okay? Because you need to probe the trade. You need to test it. Because if you don't test it, you put the house down. This shakeout right here could lock you out, and then you end up seeing Bitcoin reversing. And you'll be like, shit, I just missed out on the move. I was right in the first place. I've got a notification. What is this? ETH. Happy days. So look, there's the daily open test right there. But all that action right there was inside of this little zone here. Doesn't look much, but it only takes a certain candle to change it up. Look, we're coming back into the vector recovery. This is where the test will be. The test of the daily open. Because they've been holding out. Now we're starting to see it looks like it wants to try and come up a little bit. Here's a red vector. Now, here's what a red vector looks like. Look. Here is what a red vector looks like. Pure imbalance. You're now looking at what a red vector candle looks like right now. Okay? Now it looks like it's starting to do something here. 75. The point of control has moved up on the candlestick. All right? So we're now waiting. Is someone stepping in or a group of people stepping in? They've just swept the liquidity. Are we going to see if they can actually hold it? 98 on the point of control. So the bids are coming in and hitting it very hard. We need to see if they can mark it up from here. Okay? So now we're waiting. We're watching. What if this could be a point that we could run along from? Is it done eating this liquidity? Okay? These are the questions you ask yourself. All right? Don't just be bold and take a long. I'm giving you an idea of how to approach preparing yourself for a position, okay? Just keep that in mind. Look, 28's coming in. It just disappeared, got absorbed, all right? 51 right there, 59. We're coming in, wants to take it. There's imbalances down there. It's not going to anywhere that we haven't seen it go to before. Here we go, snap up. A bit of exhaustion right there. No one purchased at that point. And this is a red vector candle, right? You're now watching how a red vector candle gets recovered. You want to see green deltas coming in, all at the lowest point. Here we go. 23.9, we want to see that continue. So that 17 guy came in. There's now 24 at that point. Not enough. Brings it back down again. You know? These are things you got to ask yourself. And look at how fast it bloody moves. All right? So keep that in mind, what we got going on. The bonds are moving up. Does that make sense, ladies and gentlemen? Yeah? Does that logically make sense? What's it? But defo a Ponzi scheme. Here we go. Look, orders being picked up right now. Early investors making profit. They dump it to an area of strong resistance to the upside. Yeah. No, I haven't taken my migraine to magnesium, to be fair. That is very true. I haven't taken it. Here we go. Testing away from the red vector candle. We got the point of control, which we saw a minute ago. Daily open test. But it's not gone anywhere. It's moved away from the VWAP, swept the liquidity. Look, that order up there at 36.6 has been cancelled. Yeah? You see that? That order up there has been cancelled. So now we're seeing that thinking, maybe they may not want it to go there yet. They've tried to sell from that high point. They may have changed it and moved it closer. You don't know. Okay? So keep that in mind. What we got? It looks... I'm not concerned about it, to be honest with you guys. It's just not doing anything other than trading sideways. You know, Ethereum, not really doing much. Concerned about. Could sweep down, but there's no interest for me. Euro holding out. Looks like it's going to be a bit of a boring day, to be frank with you. The yields holding. Ultras are still up. Dixie holding. We might just get a very... Here we go. Test of the daily open. Happy days. Come on. This is where it gets busy. The test of the daily. This is what we want to see. This is where it gets interesting. Here we go. Look how they just come back into that. What time is it? I'll be making this quick. Delta. There you go. Delta at the lowest point. That's what you want to see. Delta at the lowest point of the candle. Look how they've swept that liquidity. Delta at the lowest. Now they're going to come and eat that imbalance that they just come in. The empty shop. They need to bring it up. That delta right there is very, very strong. And if they can't sustain it, then we have got a big selling day, okay? If they can't sustain these ranges, because they've just come back into the same spot that they've reversed from, where the delta previously didn't show the same commitment. But now look at this. You've got different deltas right here. Someone stepped in. Big delta, 25%, 28%. These are always the points that they grab the reversals from. And these are your V-shaped plays. Excuse me. And this is where retail pays the price. They go short and then they get screwed. All right. Guys, I hope that, makes sense in some way, shape, or form. A little bit of a live reading on price action. Please trade safe, ladies and gentlemen. I've got to make a move and I'll be checking in with you all later on. Peace.